How does behavioral economics impact SaaS project accounting? Imagine you are managing a software as a service project and need to make financial decisions. How do you decide what is best for your project? Behavioral economics plays a significant role in shaping those decisions. It helps us understand how people think and act when it comes to money, which is essential for project accounting in the software as a service industry. First, let's talk about how people perceive costs and revenues. Behavioral economics shows that decisions are not always based on logic alone. Cognitive biases can influence how customers and internal teams view value and risks. For example, when customers see subscription fees, they may treat them differently based on how they categorize them. If they see it as an operating expense, they might approve it more easily than if they view it as a capital expenditure. This distinction can affect budgeting and approval processes in project accounting. Another important concept is anchoring. This is when the first price presented sets a reference point for future evaluations. SaaS companies often use this in their pricing strategies. By presenting a higher initial price and then offering discounts, they can create a perception of greater value. This can lead to better customer retention and improved revenue recognition, which are vital for project profitability analysis. Present bias is another factor at play. This is the tendency to focus on immediate costs rather than future benefits. SaaS finance teams need to consider this when modeling cash flows. They should ensure that the accounting system reflects the long-term value of subscriptions, not just the upfront payments. Reciprocity also influences project accounting. When companies offer initial value or concessions, it can lead to reciprocal commitments. This affects contract negotiations and payment terms, which can impact project budgets and accounting entries. In practical terms, applying behavioral economics to SaaS project accounting means designing pricing structures that align with customer psychology. This can improve cash flow predictability and reduce churn. It also involves structuring project budgets that consider how stakeholders categorize costs. This helps with accurate expense tracking and approval workflows. Using behavioral insights can also improve financial reports. By framing key metrics in ways that drive better decision-making, project managers and finance teams can make more informed choices. Incorporating social proof in financial communications can increase stakeholder buy-in for project funding and resource allocation. Overall, understanding behavioral economics equips SaaS finance professionals with tools to influence financial behaviors. This leads to more effective project accounting practices that support growth and profitability in the software as a service sector.